Hey guys, this is just a quick one on shorting impulse in the morning. I've been hunting and hunting and hunting to get the FTSE short in line with previous price action levels. Many of you have seen me post for months and months and months, calling it long at the bottom, okay, in line with long side price action, price rejection, and short within short side price action, price rejection. Now, this morning, we had a big beat in inflation. Okay, it fell dramatically. And what's happening is your morning candle, okay, which I've just shorted into, is rampant. And that's why you've got such a sharp increase. Now, what's really interesting is it comes up off from this brushing of your earliest M8, and you can see they're starting to come together, and then you just whip fire up. So I've shorted the impulse, and I'm going to go through why and why I normally do this. Now, you can see where I've shorted has got minor rejection. In other words, there's a slight candlewick forming and you're pulling down a little bit. If I go to the weekly, okay, you can see again, we're right there at your key price action levels we spoke about, in line with where you've fallen previously. So we know this is a contentious area because it's happened several times. We also know that because you're now pulling away. Now, if I go to my monthly, and I'll have to zoom in a little bit for this, you can see something really interesting, which a lot of people fail to notice. And it really gives me an edge a lot of the time. You can see where we are now actually comes in line with this candle wick. Now, it is very small, but that one right there has formed the basis for these falls previously. And you've ran right into it before pulling away. Now, the exact same thing is happening right now. That low was 7739. You came around it, okay, because it's a monthly area, if you like. And once you've come around it, you're starting to pull off slightly. Now, often at the pre-market start, okay, anything between 8 and 8:30 for the FTSE, you start to see a big increase in volatility. And you can see what you've got here is very early daily support at this level of rejection, okay? And then lower down, you've got reasonable areas of support. Now, it's important to note that if you're looking to short these impulse moves, these really quick moves, you're going to have to do it based on higher time frames and lower time frames, because the higher time frames are going to give you an idea of where the price is likely to stop, and then you can confirm that by looking at your lower time frames. Now, generally, if I'm going to do this, okay, and I'm going to exit relatively soon, I tend to look for early price action on the higher time frames again. Okay, so you can see more or less beyond the first layer of very early support, where I probably wouldn't consider exiting anyway, because it's basically nothing. Okay, it's basically no fall. You can see you've got a layer of weekly price action, weekly support. Okay, that exists just underneath, and you've got your stock oscillator still way up, still teetering to the upside because you haven't had any real fall. But my point is simple. If you're looking on higher time frames to know those higher time frame areas of resistance, it's going to give you a really good guidance when the market fires up on newfound sentiment, like it has this morning. A big beat in inflation. People start buying stock markets or the UK stock market because they think companies are going to make more money, people are going to spend more money, and the economy is going to get better. But it won't always be the case you come right back to here straight away, okay? Because there is weekly levels in between that. And it's the same for the upside. And that's why you've got to understand that using your weekly levels is so important, okay? Because they're going to give you the guidance for the market and the long-term moves of the market. So I'll look to exit shorts on a fall. And I can hold them out longer if I'm swing trading, or you're swing trading, but otherwise you'd get a quick 40 points. So we can see how this unravels soon, but you can see clearly there's very early rejection from where I started the video and where I shorted about 7741. I got one at 7744 on one of my portfolios, and you can see again roughly that candle wick is giving you a guidance as to where the market has that contention. Okay, so shorting impulse, that is the purpose of it. The pounds have also moved a lot, and the process is exactly the same. Okay, for example, your pounds CAD, let's go for, it's probably the clearest. If I go on my weekly, you can see that the area you've fallen to is from all this rejection here. Okay, all that rejection. To the left-hand side over there, there's various candle wicks, and it slowed things up a bit. Lower time frames, if you flick to them, are going to represent that, because you can see that slight dip, and that's where I am long already on all those pairs. So thanks for watching, guys. That's how you trade impulse when the news comes out early market open. We can see how this unravels. Thanks for watching.